25 seconds away from the opening bell in New York City this morning. Good morning. Kicking off a brand new trading week with equity futures down by 1.25% on the S&P, on the Nasdaq down by 1 percentage point, on the Russell down a single percentage point this morning. Good morning to you all. The opening bell in New York City rings. Switch up the board and get to the bond market. Yields look like this. They come in down 8 basis points on 10s, at the front end even more so. On 10s right now, 188.36 is a break to the downside of 190. Euro dollar strength, the story out there. Euro dollar 112.12, negative a half of 1% on that currency pair. Crude, $95 and about 7 cents. We're positive there, 3.8%. 20 seconds in, we're negative 0.7 of 1% around the opening bell on the S&P 500. Energy top of the pile, the relative outperformance there, we're negative 0.2 of 1%. Every other industry group on my screen at the moment in negative territory. Early days, of course. We're down 1% on the S&P now. Let's get you some single names around the opening bell. Back with us, here's Kaylee.
Well, John, among those big laggards in the equity session are consumer stocks, specifically those that are exposed to Russia. The likes of Anheuser-Busch and McDonald's, for example, they're both moving lower by about 5 and 2% respectively. You also have the banks under some pressure as we see a haven flight into the Treasury market, bringing yields lower. That's not great for the names like Citigroup, which is down about 3.4%. You also have tech getting hit, but relatively less so than the broader market. Nvidia is only down about 0.4 of 1% right now. What's interesting is, in addition to energy, your outperformers today have been defense stocks, given a boost by Germany boosting in a massive way its defense spending, prodding the idea that maybe countries around the world will follow suit given the crisis in Ukraine. But all of these defense stocks are off of their pre-market highs. Sure, Lockheed Martin, Raytheon, General Dynamics, Northrop Grumman, they are still higher by about 1% or more, but they had been significantly higher in early hours this morning, John. So we're seeing them lose a little bit of steam at that opening bell, with stocks broadly down on the day, John.
Very focused on some of these energy names stateside as well. Kaylee, thank you very much for that. Given what happened with BP over the weekend, looking to drop its Rosneft stake, which is worth close to 20% of the company, half of its reserves, a third of its production. Just get your head around that for BP. That stock is negative just 5.5%. I say just because, given the story we're discussing right now, we're down just 5.5% on the BP story. It doesn't sound like a lot. 357 over in London trading. I want to touch base with Anne-Marie down in DC to catch up on this story of the moment. AMH, it's these talks on the border in Belarus. Have we had any indication that they have wrapped up? Have we heard anything about the outcome of them?
No, we're still waiting for that, Jonathan. At this moment, standing at the White House, I have no indication about even the sentiment of those talks. Are they in good faith, and what is potentially the outcome? But we do know that Ukraine has gone into them really wanting a last-ditch effort to avoid this war, not avoid, end this war, because the war is happening and Kiev is completely being encroached, and this is something Ukraine wants to avoid at every moment. What I can tell you from here is that we are waiting for the president to get back from Delaware, where he spent the weekend. He should be arriving this hour, and then at 11:15, Jonathan, he'll be talking to a number of other leaders and allies about this crisis and their updates off of the heels of the fact that we got more information about the sanctions and penalties the U.S. and the West are really slamming on the Russian economy.
I'm going to talk about energy in just a moment, AMH. I'd love your view on a couple of things, and that's climate change. The Polish speaking at the moment, saying that the EU climate policy needs revision. Now, one thing that I've been wondering, Anne-Marie, is whether it accelerates the transition, or in some cases, in some countries, reverses the transition as they try to wean themselves off depending on Russia for oil and gas.
It's a great question. When Jen Psaki was asked about it on ABC this week, and she said energy was on the table, something the administration has avoided to say because of how important Russia is to the global energy market, being the second big exporter of crude. She said that part of this is also a fact that us and other countries need to realize that we need to lessen our dependence on, especially for Europe, not just fossil fuels from Russia, but also fossil fuels in general. The issue is, Jonathan, is especially in Europe, natural gas was really going to be that fossil fuel that was the link for the energy transition. And this is critical for Germany because over the course of the last decade, they have been shutting down their nuclear sites. So they are ever more attached to that Russian energy. But over the weekend, we had a historic speech from Olaf Scholz. And so much of that was about defense spending. They want to hit that 2% target. This is an absolute reversal. I think one of the most paramount issues coming out of the weekend was that speech. But also, that's not getting a lot of attention, is he talked about energy and how they need to build more LNG LNG storage facilities. That would mean they can have more shipments instead of taking some from the Russian pipelines.
MH, as always, stay close for breaking news. Anne-Marie down in D.C. A headline from Chevron: no current operational impact from Russia's invasion. So for Chevron, they say no current operational impact. That's the headline from them. Here's the quote from Goldman's Jeff Curry this morning. Says the following: commodity markets need to reflect not only these difficulties in paying for Russia's exports, but with little left to sanction, the risk that Russian commodities eventually fall under Western restrictions. So Badra Japa, Matt Miskin, Ashok Bhatia is still with us. Matt, I'll come to you on that. Is that your base case, that that's where this ends up? Because I've thought about it in theory. In practice, it seems like some people will self-impose those kind of restrictions, sanctions on themselves anyway. Do you see it heading in that direction?
It's going to be really hard to do. I know that it's probably the right thing to do in a lot of countries to sanction Russian energy, but they're going to be so dependent on it. What you really need to see is OPEC plus the rest of the oil-producing community step up and bring more barrels to market. We think you see that. You see, the Middle East bring more oil. Their production is still not back above where it was pre-COVID. So we've got to get that back up and running. We need the United States to actually increase its oil production, more rigs, more oil production in the United States. And we need to fill this void. It's going to really dent the global economy with oil prices this high and the geopolitical risk that is now being priced in across markets. We need energy back, and that's something that's going to happen without Russia helping much at all.
Well, the team at Goldman are doubtful. They're looking at 115 on Brent, 1 month price target up from 95. This was a line that jumped out for me, Ashok, in the research, and I think this will resonate with you. Barring a breakthrough in peace negotiations, we believe this leaves commodity prices having to rally sharply as we see demand destruction as now the only significant remaining balancing mechanism. Ashok, let me repeat that, and I'll ask you if you agree. That demand destruction is now the only significant remaining balancing mechanism. Do you agree?
Yeah, I think just with a couple of caveats. I mean, there are a few things out there that could also help. There is some discussion that perhaps there's an Iran deal that could bring, a few million barrels onto the market. There's also, the potential for some strategic releases, which, the variety of crude they hold, there's certainly refinery issues there, though. And then third, though, this is a big, chip for a potentially negotiated settlement. The central bank restrictions on the Central Bank of Russia, the U.S. released its, the official documents this morning and are trying to carve out energy producers. In practice, that could end up being a lot harder than we think people expect. So that may be something that, if we can get to a negotiated solution, could come off. So, but I think generally that point that demand destruction is going to be a significant issue going forward, and sort of the balancer is accurate.
The quote from Amundi that I think will be of interest to you as well, Subhadra: rising oil is a major source of inflationary risk at a time of already hot global inflation. Then they use the S word, the risk of stagflation globally is now higher. I've heard that word a few times, Subhadra, stagflation. Do you think that's the right word to characterize the environment we're about to go into?
Well, we've heard that from one of the ECB members, right? So definitely there's a preoccupation on what the impact of persistently higher inflation is going to be on growth, and that kind of points towards that sort of scenario, although I think broadly speaking growth in the U.S. is going to be okay this year, anywhere between 3.5% to 4%. Ironically, this whole green transition is going to require more commodities, more oil, more copper, all of the other commodity complex, demand is going to go up because of the green transition. We're just not there yet to be able to fully transition to a green world. So, during that time, during the transition phase, there's going to be quite a lot of demand for a variety of commodities. And if you assume that the Fed's going to be somewhat more cautious on its path of rate hikes and not deliver 7 rate hikes this year, then there's a chance that inflation expectations remain, relatively high. The Fed might err on the side of letting inflation run a little hotter so that they don't really stymie growth. So in that sort of scenario, I think that inflation expectations, the rising inflation expectations, is possible over the near to medium term. The green transition is going to take several years, so I think that the dependency on commodities and oil is going to be here to stay at least for the next couple of years.
That transition's getting more expensive. Ashok, just to leave the macro stuff to one side and just get to a final question for you. When you work through the portfolios, you speak to people in markets right now, do you get the impression they still have Russian exposure to sell? Does that come up a lot in conversations? Because this morning, that's what it's about for a lot of people. They're looking to the foreign investors that haven't been able to sell today, and I'm trying to work out if this move is really that cathartic move or whether that's still further down the road.
Today is the day, I think, folks and portfolio managers and clients are working through what is their Russian exposure? Are you legally able to sell it? And if so, how do the mechanics of that work? And then the second issue, the last issue is there a bid for this? Certainly, the indications we're getting is that the volumes that are being able to be transacted in the currency are pretty limited. Hard currency bonds, less liquidity. So our best guess is that we're going to enter a period where what people own in Russia is likely kind of remaining on people's books, and there's not going to be a lot of back and forth and trading of these assets for the near term.
Ashok Bhatia, appreciate your time as always, sir. Matt Miskid, Subhadra Japa, thank you. Just hearing from Lufthansa, a spokesperson making comments by telephone saying the following: they do not expect an impact from Russia's flight ban. They go on to say they will continue flying south of Russian airspace to Asia. Will mean a change to get there, a change for China, South Korea and Japan. They are the comments from Lufthansa this morning. The bottom line, they do not expect an impact from that flight ban. Coming up, oil soaring amid mounting energy concerns.
As of today, there is no disruption in oil supply through Ukraine.
More on that conversation coming up, and a conversation with this man you do not want to miss. Pierre Andorin, the founder and CIO of Andorin Capital Management. That's next. This is Bloomberg.
President Putin's decision to pursue his aggression against Ukraine is a terrible strategic mistake, for which Russia would pay a severe price for years to come. We must stand ready to do more, even if it means we have to pay a price, because we are in this for the long haul.
The West ramping up sanctions on the back of recent escalations. Goldman's Jeff Curry expecting President Putin's latest actions to shift the energy narrative in the U.S.
It was very clear from the West energy was off limits. But what happened yesterday is a clear escalation in potential sanctions, and the fact that energy now is being a industry that is being reconsidered as being off limits.
Joining us now is Javier Blas, our brilliant Bloomberg opinion correspondent and columnist. I want to start here, Javier. Even if they want to carve it out, can they carve it out? That's something you've been thinking about over the weekend.
Well, they can carve it out in some ways, and we have seen the U.S. Treasury has issued a general license that allows to continue paying to Russian banks that have been sanctioned and even have been disconnected from SWIFT. The energy payments are authorized, and it includes, it's very wide definition, it includes anything from crude oil to refined products to natural gas to even uranium or timber. So they can continue paying, but there is a huge amount of self-sanctioning by the banks and by the traders. We may see that officially nothing has been blocked, but unofficially corporations, companies are taking a different view.
That's the word I want to pick up on, Javier. Thank you for it. If you're not following Javier Blas on Twitter, you should, because he's going to give you everything you need to know about what's happening with the commodity market. This man will too. Pierre Onderrad, the founder and CIO of Onderrad Capital Management. He joins us now. Pierre, fantastic to catch up with you. Let's just start with an open one. How you expect the sanctions that have been announced to shape the flows of commodities out of Russia into the rest of the world?
I think, as Javier said, there will be some self-sanctioning. So, we can already see the Urals is trading at very large discounts, and there's no visibility on how the sanctions will evolve. So even though for now the sanctions are not targeting energy export, that could change over time. So there's some fear from anybody to buy Russian oil at the moment. But I would say that prices are not going to be only dependent on that. But I can answer that later.
No, please do. What do you think they'll be dependent on?
Okay. Well, first, before the Russian invasion of Ukraine, the market was already very bullish, and I expected to see much higher prices than today. So I think a large part of the rally is not only due to the Russian invasion of Ukraine, and the main fundamentals are that already inventories are very low, there's very little spare capacity, there's very little expected supply growth, and there's a high expected demand growth due to the recovery of COVID. So already just that, should justify much higher prices than today. Then the Russian invasion, changes, could change potentially a lot of things, but we don't know yet how it's going to pan out. Things could get better soon as things could, get much worse over the long term. So I don't think oil prices are only going to be dependent on the amount of Russian oil we lose over the next few months. I think there's a lot to it. There's if Putin stays in power and carries on the tensions, and there's no de-escalation, the sanctions will stay. That will impact Russian production in a big way. That will eventually impact Russian exports as well, and that will also impact an acceleration towards alternative energies, towards the energy transition over time. So there's a lot of factors at play. It's not only about how much oil production we will lose from Russia today.
Well, decarbonisation was at the epicenter of your thesis. When I look at some of the fund's performance for you, Pierre, I saw one up more than 100% in 2020. In 2021, I think up more than 30%. I'm wondering now, Pierre, and I'd love your view on it, whether this shift to decarbonisation accelerates or reverses because of what we're seeing play out. I hear the likes of the Italians talking up coal again. The Polish looking at maybe doing something as well. I just wonder from your perspective, do you think it accelerates it or reverses it?
No, it has to accelerate, because so far we did some work on reducing the supply but not on reducing the demand. So I think we'll have to do a lot more work on reducing fossil fuel demand alongside supply. So the supply should actually go down after the demand, obviously, so that we don't have price shock and we don't give more power to countries like Russia.
Russia has the power, seemingly right now, Because everybody wants a carve-out.
But I think they think they have more power than I think they really have. I think there's room, if needed, to put sanctions on Russian oil exports. I mean, Russia is exporting 6.5 million barrels a day. 2 million, about 2 to 2.5 million barrels a day going to China. So that leaves like 4 million barrels a day going to Europe or the US. If we were to sanction that, I'm sure that 1 million barrels a day of it would go to China, so which means that we'll probably lose 3 million barrels a day of supply. This is an amount that the world can afford to lose to some extent. I mean, if we lose that supply, the Gulf countries would probably increase production by 1.5 million barrels a day, and then we'll probably need to reduce, to take some oil from the IEA emergency reserve, so the global SPR, at the rate of 1.5 million barrels a day, and that's without, losing some demand due to higher prices. So
yeah, that's
I
a
think
slightly controversial view. Can I just jump in and pin you down on that?
Sure.
You think that Europe could move on without Russian gas, without Russian crude?
No, Russian oil. Russian oil
specifically.
Russian gas, Russian oil, I don't think is too much of an issue. And Russia is getting 5 times more revenues from oil than gas. So I don't really see too much of an issue. At the end of the day, there's a lot at stake here, right? We're speaking about potentially World War III starting, and that needs to be stopped as soon as possible. Obviously, there will be costs, but there will be less cost trying to stop it early than trying to stop it late, right? There will be less human cost and economic cost in trying to stop Russia right away and show that we are serious and that we're willing to take a cost. I mean, there's one reason why Putin thinks he has the power and is kind of bullying the world is because he thinks we are not ready to take any economic cost. But I mean, we are speaking about a war on the free world. It's not, it's not a small thing, right? Yeah. I mean, there will be cost to it.
No, I hear you. Goldman Sachs think that the only remaining balancing mechanism left in the commodity market, crude specifically, Pierre, and I'd like your opinion on this, is demand destruction. That ultimately crude prices go higher from here, but that kills demand, and that's how we're going to balance this market. Do you agree with that?
Yeah, I mean, I agreed with that even before the Russian invasion, right? I think we have to take oil. I mean, why now? As I said earlier, we have low spare capacity, we have low level of inventory, we have low supply growth and still high demand growth. So we should bring that demand growth back down. We have to take it as something that's a bit more of a luxurious product and not a birthright. You don't want to, this oil to actually, support autocratic regimes around the world.
I know you've got really strong views on the SPR release as well. Pierre, you've seen the headlines. I've seen the headlines this morning.
Yeah, I mean,
we made this effort at the end of last year. Seemingly we're doing it again. Do you think it moves the dial at all?
I mean, I think it needs to be done for the right reason. I mean, using SPR to try, to bring prices down is a no-go. We're at the beginning of a multi-year deficit. So if you start using the SPR early in the multi-year deficit is, shooting yourself in the foot. You need to keep that for the right reasons. And I think the SPR has always been there to bring more supply when we have large supply disruptions due to geopolitical shocks. And that's probably what we will have over the next few months or years. So the SPR should be kept for those events, not to manipulate prices, but and that the way it was always used in the past is using SPR due to large supply disruptions from a large producing country. And I think it needs to be used for the right reason.
Pierre, as we work through your conviction trades right now within some of the portfolios, the funds, what is the number one? And I know a lot of your views right now coming into the weekend, coming into the last few weeks, you've maintained them. I'm more interested in the views that have changed. Pierre, have any of those views changed?
I think there's more, question mark. I mean, I think on oil I'm still as bullish or slightly more bullish than before because if anything we're losing, you're going to lose some supply. Eventually we lose some demand too, but at higher prices. But overall the price would have gone up in oil. So it makes me more confident about the low probability of a move down, on the way. For gas, I think it keeps it supported. I mean, basically, it's in line with the fundamental views, right? Oil and gas in Europe would be supported over time, and I think that makes it even more supportive.
You know what I've seen in history, you've seen it too, that typically you get above 100 and strange things happen and it's not sustainable. Pierre, do you get the sense that things are different this time? Goldman's talking at 115 on Brent over the next month. Yeah, I'm trying to think about what numbers you're thinking about and how sustainable you think they are.
No, I don't think that $100 is unsustainable. I don't understand why people would think that. I mean, we had a period from 2011 to 2013, where Brent was $111 in average, which is $150 of today's dollars, and the economy was okay. That was during the European crisis, and we had a large supply growth in US shale at the time. So I don't see why people would think that $100 is high. Sure, it's higher than the last few years, but by historical standards, the average of the last 14 years for Brent, inflation adjusted, is $96. The high of 2008 at 147 is equivalent of $222 today. So I don't know why suddenly people think that $100 is so high. Sure, it's only because they thought that because of US shale, we'll never see $100 again, but that was a wrong view to start with. I think the economy can support it. The economy can support 120, 130, 150. It's just really psychological. I mean, I remember in 2004, when I was quite bullish, oil was at $33 a barrel, and I thought due to the long-term fundamentals that oil would go up to $100. And at the time, people thought that $33 would kill the US economy, and that was obviously proven wrong. I don't think there's so much impact on the global economy. I think it's a lot more inelastic than we think.
Pierre, awesome, as always. It's been too long. Let's catch up again soon. Stay close, please. I'd love to catch up through the next couple of weeks. Pierre Underon there on the situation in the commodity market. $100.61 on Brent. The news coming from Fanny Birol of the IEA. We will hold an extraordinary ministerial meeting tomorrow on the impact of Russia's invasion of Ukraine on oil supply and how IEA members can play a role in stabilizing energy markets. More still to come from New York City. Thank you for being with Bloomberg TV. This was the Countdown to the Open.
From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
It's 30 minutes into the U.S. trading day this Monday, February 28th. Here are the top market stories we are following for you at this hour. All is not quiet. Russia's invasion of Ukraine continues even as delegations from both countries meet in Belarus. Concern grows about a full-scale assault on Kyiv as President Zelensky says the next 24 hours will be critical for Ukraine's fate. Sanctions rain down. The West responds to Putin's aggression with a financial onslaught, cutting Russian banks off SWIFT and targeting the central bank. The ruble plunges even as the Bank of Russia more than doubles rates to cushion the blow. And ripple effects, assets roiled around the world as equities drop, bonds rally, and commodities surge, with Brent crude back above $100 a barrel. We'll discuss the energy impact with Rick Munikref, Devon Energy CEO. From New York, I'm Kaylee Lyons with Guy Johnson in London. Welcome to Bloomberg Markets. Alex Steele is off. Guy, it's a new week, but really the news flow started in dramatic fashion over the weekend, and markets across the world now reconciling with those moves.
Yeah, last week you must have had a busy week, as you say. The news changed over the weekend. A number of steps I think people didn't expect at this stage. Certainly a much more aggressive tone coming out of D.C. We're going to hear from D.C. in just a moment, and out of Europe. A huge pivot from Germany over the weekend. Really the biggest change, you could argue, in German foreign and defense policy in 50 or 60 years. We're now got Kaylee, more sanctions coming from the Biden administration. It's a similar story over here in Europe. Clearly, all of this continues as we watch the situation on the ground in Ukraine develop. We are going to hear throughout this show a number of different angles on the key stories the markets are trying to grapple with right now. But first of all, let's start in D.C. Bloomberg's Anne-Marie Hordern is there for us. Anne-Marie, as Kaylee said, huge shifts in policy both out of D.C., from Berlin, from Paris, from London over the weekend. In terms of what we should expect next, have the big salvos been fired? Should we be expecting this kind of pace in terms of the pressure being applied to Russia to be kept up?
It's a great question. When I spoke to an official about it last week, when they put the initial pretty big tranche one, I guess we can call that now, on some of these banks, especially sanctioning two of Russia's biggest banks, Sberbank and VTB, some people thought that was just it, and they thought it was pretty weak. And then over the weekend, we saw a coordinated response from Europe, the United Kingdom, and the U.S. talking about going after those reserves the Russian economy has built up. President Putin has built up $640 billion U.S. in reserves. And today, when we heard from officials, that is exactly what they're targeting, as well as no institution or U.S. person could do business with the Central Bank of Russia, the Russian National Wealth Fund, as well as the Russian Foreign Ministry, the Economy Ministry. And they're also going even further in the sense that there was already sanctions on a number of individuals, including Kirill Dmitriev. He runs the RDIF. Now they're putting full blocking sanctions. So you see this has escalated. One thing we, of course, potentially still have on the table, according to Jen Psaki, the president's press secretary over the weekend, is energy. She says it remains on the table, even though there's been a number of carve-outs for the energy sector to make sure that those Russian exports can continue to quell the price that this administration's worried about.
Well, obviously, as they're worried about prices on the pump, Anne-Marie, they're also looking potentially at more supply and another tap of the SPR. What can you tell us about that?
Yeah, and the IEA, Fatih Birol, just came out and said that he's going to be having an extraordinary meeting with IEA consumers. The U.S. is talking to a number of consumers to potentially tap the SPR yet once again. They did this last year. The U.S. potentially could do 30 million, and then the remainder of the consumers can do the other 30 million. This would be another demonstration, along with their partners, working in lockstep, which is something that the president has wanted to make sure he is doing on a multilateral approach to this to quell some of those price controls.
All right, Bloomberg's Anne-Marie Hordern at the White House for us today. Thank you so much. So that's the D.C. angle. Let's now take a look closer at the financial fallout for Russia specifically as sanctions send markets on a tailspin there. Joining us now with more is Damian Sassower, Chief Emerging Markets Credit Strategist for Bloomberg Intelligence. Damian, the ruble is cratering. Credit default swaps now signal a 56% chance of default.
Is that all?
Where do you put the odds?
Well, I mean, look, 5-year CDS in Russia is now at 1,000 basis points. To be clear, Ecuador, which is a serial defaulter, 900 basis points. Turkey, which has been the whipping boy of emerging markets for the better part of the last 2 years, only 580 basis points. So clearly, the market is putting a very high probability on default. And you see S&P and Moody's towing the line as well. I mean, S&P just downgraded by 2 notches to BB+, and Moody's has them on negative credit watch. So look, Russia, for all intents and purposes, is off the mark. And everything we're looking at in terms of dollar ruble, 98, it was at 112 earlier. Yeah. Forget it, is not reflective of a clearing price given the sanctions and given the constraints. So take it off your screens. Dollar ruble is meaningless in this market. I think what we have to look at is not all the, Japan and Australia joining the U.S. and West as in sanctioning Russia. It's those who haven't been, and specifically Turkey, India, China, the UAE and Saudi Arabia. We are looking for what comes next. This is their time on the geopolitical stage to make a stand here, and we're not seeing that. Certainly India, which has relied on Russia for all its military, all its technology, and in the case of Turkey, they've shipped drones and military technology to Ukraine. Why are they not stepping up here in solidarity with Ukraine? We're going to be waiting to see more color on that, Kayleigh.
Could we just talk a little bit about what is China's next move here, Damien? Because I read a lot over the weekend talking about the yuan, maybe effectively the currency of the commodity market going forward, as effectively traders try and get hold of yuan in order to go effectively via China to be able to access Russian commodities. How realistic a prospect is that?
Well, I think in time, Guy, the yuan does have, some reserve value in terms of having, real reserve value for central banks globally, but we're not there yet. And look, the reality is the meeting between Xi and Putin pre the Winter Olympics, it almost makes Xi look complacent, like he may have known something before the fact. At least that's what I'm hearing from my sources, and that is not a good thing. You already know CGBs in China are considered to be, sort of a separate asset class within EM. Some people are explicitly putting in policies to limit their exposure to China. Whether or not that continues remains to be seen. But, yes, I agree with you that the yuan has reserve value, but, China just, they need to step it up here. I mean, they could put a stop to this all at once if they so chose. We just haven't seen anything out of them yet. And don't be fooled by some of the, letters of credit on oil that ICBC and, are kind of scaling back. That has everything to do with counterparty risk management and everything to do with the sanctions from the West. It is not a stance on what China believes who is in the right in between Ukraine and Russia at this stage.
And to go back to Russia specifically, Damien, obviously stocks are not trading on the Moscow exchange today. The Bank of Russia just announcing there will be no morning or evening trading for the rest of the week, March 1st through 5th, and FX trading on the Moscow exchange tomorrow, Tuesday, will take place from 10 a.m. to 7 p.m. Obviously, the Bank of Russia stepping in today, trying to control capital flows, more than doubling to 20%. Is any of that going to be effective?
We're in uncharted territory, Kayleigh. I mean, I've never seen anything like it. But yes, I mean, it should be somewhat effective. It's more the capital controls which are going to be effective in preventing, dollars from moving offshore. They need to keep dollars in-house. We see that in FRA OIS spreads. If you're looking at that, if you're looking at dollar-yen or euro-dollar cross-currency basis swap spreads, they're all showing significant, red alarms in the sense that, conditions are getting tighter and there may be, supply bottlenecks. We know Zoltan Pozsar wrote about this. I don't know if it's going to be long-lasting. I don't know if we're going to see something along the lines of what we saw in March of 2020, but certainly it's catching everyone's attention now. And financial conditions are tightening, and it's going to have, some sort of calculus, I think, on the FOMC going forward over the next few meetings.
Damien, is Russia now in the same bucket as Iran, as Cuba, as Venezuela? And if so, what muscle memory do financial institutions have from dealing with those countries, or more specifically, not dealing with those countries? Presumably, it's not kind of act and then figure out afterwards. It's let's not act and then we'll try and work out whether something's possible. Can you just walk us through how financial institutions are going to be thinking about how they're going to deal with Russia right now and what lessons they will have learned from these other countries?
I mean, Guy, at this point, financial institutions are just looking to assess their exposure to Russia. But you're absolutely right. If you look back in 1998 during the Yukos debacle, Yukos didn't need to default, but they did, right? Because, quite frankly, that was the choice of the government. And so, look, it's by choice here. I do believe, though, yeah, you're absolutely right to bucket Russia with Syria, with Iran, with Venezuela. It makes sense in this environment, and don't be surprised, given what we've just done, the sanctions, effectively, Guy, I consider that to be almost a de facto act of war, the way it's going to destroy their economy and plunge them into a deep recession. So, what's in Putin's playbook? It's going to be moving, perhaps military weapons closer to NATO states. I think of Cuba, I think of Venezuela. It's going to be cyber attacks, aggressive cyber attacks, and it's going to be the beginning of, quite frankly, a military spending across the board is going to go up. We see that in Germany. We're going to see that in the U.S. and across the board, Japan as well. Yeah, it's going to be a very different world going forward, unfortunately.
Damien, we'll look forward to your continuing coverage. Thank you very much indeed. Damien Sassower of Bloomberg Intelligence. What have we got coming up for you next? More on the fallout from the Ukrainian invasion and the stress more particularly it's creating within the financial system. Damien alluding to that. We are going to be speaking with the fixed income chief over at Charles Schwab, Kathy Jones, joining us next. This is Bloomberg.
Exclusive Monday. JP Morgan Chase CEO Jamie Dimon sits down with Bloomberg's Ed Hammond. Live from the JP Morgan Global High Yield and Leveraged Finance Conference in Miami. Only on Bloomberg TV and radio.
So it wasn't much of a weekend, was it? The news flow thick and fast. The US and the European Union ramping up sanctions against Russia, sending shockwaves through financial markets around the world. Joining us now, Bloomberg's international economics and policy correspondent, Mike McKee, to talk a little bit about what has changed. Mike, SWIFT, the financial transaction system that is so important to the global plumbing, we started to see cracks appearing. We started to see the European Union sanctioning some institutions over the weekend. The Americans doing a similar thing as well. Just talk me through how big a shift this is and the implications of it.
Well, the Society for Worldwide Interbank Financial Transmissions is a big deal, but it is not the deal. The deal came yesterday with Ursula von der Leyen and then today with Treasury Secretary Janet Yellen, because it is, as you said, a transmission system. And what messages are they transmitting? They're transmitting back and forth payments. And that's what the U.S. and the EU have banned, prohibiting transactions with the Russian central bank today. This is an earthquake. It's the kind of thing that's almost never done except with extremely small rogue economies. The Russian National Wealth Fund, Russian Finance Ministry also targeted. And what that's going to do is freeze 50% or more of Russia's foreign exchange reserves, which leaves them in a world of trouble, and then, of course, disconnecting banks from SWIFT. But let's talk about what it actually means to lose their Forex reserves. Here's a chart that shows a plunge in the ruble, but this is the story here. This is me, and I'm buying something from Kaylee. But Kaylee has an account in Venus, and I have one in Mars. So what do? I send my money to a corresponding bank in the middle. Could be a private bank, could be the Central Bank of Russia, depending on what level we're transmitting. Kaylee then goes to this bank and says, please give me the money and send it to XYZ, who she owes. Now what we're doing is taking out this middleman. There's nobody there. So I can't send money to her, she can't send money to me, and the system just stops. And that means that the Russians can't get at their Forex reserves because most of them are located overseas. We have most of it in the largest amount in the European Union at this point, and we also have a lot in the United States. Their biggest holding is in gold, but how do you sell gold when you can't get anything in or out of the borders? So at this point, the Russians are going to be stuck. They're going to have payment problems. They can't pay. They can't get paid except for oil, which is the one loophole right now, and they lose the euro, they lose the dollar, they lose the pound. The yuan, they can deal with China, but then they got to buy everything from China. And this all means higher inflation, declining living standards for the people of Russia, and it is a major, major step.
Mike, thank you very much indeed. Brilliantly executed. A couple of extra headlines coming out onto the Bloomberg as we speak. We've got the UK government bringing forward an economic crime transparency bill. They are going to make it harder and harder for Russians to use effectively the City of London as a way of funneling money into the global economy. They're also going to be changing the rules around Companies House, which is the registration process here in the UK. A lot of foreigners using shell companies effectively to hide assets. We've also had the Elysee announcing that Emmanuel Macron, the French president, Kaylee, has been speaking with Vladimir Putin by phone. Putin apparently guaranteeing or talking about the idea that he will not be targeting civilians, which is something that you normally don't do under the normally accepted rules of warfare.
Yeah, the understood rules for sure. So we will continue to monitor those headlines. In the meantime, let's get more on the market implications of all of this. Kathy Jones, Charles Schwab, Chief Fixed Income Strategist, is joining us now. Kathy, Mike was just outlaying everything that is going on with SWIFT, the potential financial repercussions for the system broadly. Do you see any signs of stress, of funding stress at this point?
Well, we've seen a few signs of it here and there, but it's not terribly serious in the United States or among U.S. financial institutions. I think when we look at the credit markets, we're seeing a number of deals just not coming to market because of the unsettled conditions. But, you know, we do have to worry about when you start to clog up the financial system, how do you provide liquidity to markets and keep markets functioning? And I think that that's going to be the real challenge here going forward for the Fed, because the Fed acts as the central bank to the world, especially in emergencies. So we're seeing some signs of stress here and there, but you know, so far markets are functioning pretty well here in the U.S.
Kathy, what impact will the conflict in Ukraine, do you think, have on the Fed's decision to tighten monetary policy? Do you think we see it slowing down? We see smaller increments? Do you think the trajectory changes here?
Yeah, I do. I mean, I'm going to be very curious to hear how Jerome Powell talks about this at his congressional testimony this week, because on the one hand, the Fed's job is to provide smooth functioning of the markets, and that means providing a lot of extra liquidity. I wouldn't be surprised if that standing repo facility is being tapped, et cetera. And on the other hand, you can't then say, oh, and by the way, we're going to tighten. I just don't see how those two things can go together unless something changes pretty drastically. So we have always been below the consensus in terms of our expectations for Fed policy this year. And I think that this really could slow them down, push them back a bit. Despite the fact that, inflation's very high and spiking with energy costs, you could argue that those are going to hurt demand. It's a tax on consumption and slow the economy down the road. But I think the first task here for the Fed is just to keep the system functioning and not do harm.
Well, obviously, the bond market is trying to figure out the trajectory of Fed policy. It's also benefiting in some way from at least the Treasury market is a flight to haven assets. The 10-year yield is down about 10 basis points today, 186. What is fair value for the 10-year if the Fed is not going to be as aggressive?
If the Fed's not going to be as aggressive, then we would put it closer to 150 or so. What I'm really, though, looking at is the sort of deferring rate hikes in order to get the economy in order, or in order to find out what the global economy is going to look like on the other side of this crisis. But right now, I would put it more at 150 than at 2% for the 10-year. We're keeping an eye on the 2-year because up until this morning, the markets really hadn't taken out expectations for those steep rate hikes by the Fed, but I think they will over the next couple of days if this continues.
Kathy, we're going to have to leave it there. Thanks for the update. Really appreciate it. Kathy Jones, Charles Schwab, Chief Fixed Income Strategist. Thank you very much indeed. This is Bloomberg.
That all day yesterday.
The humiliation of Vladimir Putin. That's the title of this morning's note from Greg Valliere of AGF Investments, who warns this could be one of the most volatile weeks the world has seen since 1945. Greg joins us now. Greg, in your note, you also detail how this probably hasn't gone the way that Vladimir Putin has expected thus far. The fight that Ukraine is putting up, the lack of support he's facing on the domestic front. How much longer can Putin pursue this and hold on?
I think for a while longer, Kayleigh, but I mean, there are two big humiliations for him. Number one, his army has not performed well. And there's a big piece in this morning's Washington Post quoting a lot of defense experts who were scathing. I mean, they ran out of food. They ran out of fuel. Morale is terrible. They're not taking over these cities. And then you look back home in Moscow, and I think he has to know what all of your guests have been saying this morning. Russia faces not a recession. Russia is facing a depression.
So what does that mean in terms of domestic politics as you read it, Greg?
Well, in Russia, I think that, well, as the New York Times said today, the top general seems to be quite skeptical about even talking about a nuclear option. And I think a lot of people high up in Moscow might be thinking of trying to replace him. So I think his standing is a bit more tenuous. Maybe the war goes better for them in the next week or two, but I think that the patriots, the great Ukrainian patriots, have some momentum, and they're going to get a lot more arms in the next week or two.
What about domestically here in the U.S., Greg? With the State of the Union tomorrow, do you think that the American population is happy with the Biden administration and the job they have done on this issue so far?
No, they're not happy with Biden on anything. There was a poll yesterday in the Washington Post, 37% job approval rating. That's appalling for him. So he's got to have a great speech tomorrow, the State of the Union address. But on issue after issue, urban crime, immigration, inflation, it's not an easy stretch right now for Joe Biden.
How has this changed domestic U.S. politics, do you think, Greg?
It could. I mean, I suppose you could say that signs that the Ukrainian patriots are prevailing could be a feel-good story for everyone, including Joe Biden. But if it doesn't, I think voters will continue to focus on things like crime and inflation. And that it's awfully hard to see that helping him. In fact, I would say that when you talk to people on Capitol Hill, their view is not only will the Republicans take the House, the issue is by how many seats? Could it be 30 or 35?
Greg, we only have about 30 seconds left, but so far the Biden administration has not sanctioned energy. Inflation has a factor to play there. Do you think they will make that move?
Yeah, that's a good question, Kelly. That's the last shoe to drop. And obviously in Western Europe, that would not be well received because they've been, blackmailed by the Russians. But that's not out of the question. And as Jen Psaki said yesterday, it is still an option.
Greg, we'll leave it there. Great stuff. Really enjoyed the note this morning. Thank you very much indeed, as ever. Greg Valliere, AGF Investments. Thank you very much. What have we got coming up for you next? We're going to talk about what is happening with WeWork. Such a massive story. It continues to be something you want to pay attention to. Also, what is just happening in terms of the return to the office story? How is that developing? We're going to talk to the CEO of WeWork. That conversation is coming up next. We'll be joining him from the JP Morgan Credit Conference. Obviously tomorrow we have Jamie Dimon himself. We'll get his take on so many issues. Really looking forward to both conversations. This is Bloomberg.
about an hour into the U.S. trading session. Bloomberg's Kriti Gupta is looking at the moves. And Kriti, it is a down day, but we're not really looking at the losses we thought we might see when futures opened last night.
Yeah, and it's because underneath the hood, there's a little bit of a mixed reaction here. It's not just a risk off across all sectors. Let's start here with Anheuser-Busch and Coca-Cola. These are notably the stocks that are actually really suffering off these geopolitical risks. These are also the stocks that have some pretty huge exposure. Coca-Cola, 21% of their volume actually comes from Russia and Ukraine. So this is not great for a business or a market, I should say, that was supposed to be the most fast-growing market. A similar story for McDonald's. Anheuser-Busch actually has 14% of the beer market in Russia. Russia actually has the 6th largest beer market in the entire world. So you can see those stocks really taking a hit from that exposure. To the upside, though, you have those defensive stocks really taking hold here. Aerospace and defense are going to be your clear bid. Lockheed Martin, Northrop Grumman are clear examples. Other companies that are getting a bid are going to be those oil companies as well, specifically the oil companies that actually have that American exposure. So great example here is EOG Resources, other commodities as well, simply given Russia is that big export-driven economy. Important to see that a lot of those prices are going up just given those geopolitical premiums. Let's end here with the bond market because as you see yields actually kind of coming down a little bit lower. The 2-year yield nearly flat, and that's simply because we're starting to see a bid in those money markets. The idea that in geopolitical risk, you want your money where there is most liquidity, and therefore those money markets, even in the ETF world, getting quite a bid.
Kriti, great stuff as ever. Thank you very much indeed. Bloomberg's Kriti Gupta. 1 hour into U.S. trading. Now, over the weekend, as we now know, the U.S. and the EU ramped up sanctions on Russia. That's, of course, raised concerns amongst some of the companies doing business there. We were just hearing about that from Kriti. One of them is also WeWork. We're joined now by Bloomberg's Ed Hammond, standing by with the CEO of WeWork from the JP Morgan Leveraged Finance Conference. Ed.
Thank you, Guy. I am indeed joined by the CEO of WeWork, Sandeep Mathrani. Sandeep, let's start with the Russia question. You have a small portfolio of offices there. How impactful has what's gone on over the last week been to the business?
First I want to sit back and say that, our hearts do go out to my colleagues who are in Russia, my Ukrainian colleagues who work in Warsaw. Our thoughts and prayers are with them. We have just 4 locations in Moscow. We do incredibly well. We are, as of right now, over 90% occupied. It's a small part of our business. The revenue is about, top line revenue is about $10 million on our base of several billion dollars. So it's a very small part of our business. Not much of a financial or business impact to our business.
Will you have to retreat from that market, though?
Sorry?
Will you have to retreat from that market?
Again, it's, I don't think so. Like I said, our assets do incredibly well. We hope for a resolution of the conflict, and hopefully we can continue to do business in Moscow.
Now, talk to me about WeWork today, and really my question is, what is WeWork today? We sort of remember it as being a kind of tech company, then it became a real estate company. I'm not exactly sure how we should think about it in the current environment, and I guess by that I'm asking, how much of WeWork now is the WeWork that it was when Adam Neumann left in 2019?
The WeWork has always been I use the word a disruptor of commercial office space on the real estate side. It was created to create this sort of one-stop solution for small and medium businesses and today enterprise clients at scale, right? So WeWork has this co-working business, and WeWork has this flexible office business for enterprise clients. So if you want to take a 10-person office, you get a turnkey solution if you're a small business, and if you want 100,000 square feet as you're an enterprise client, you get that as well. So WeWork has 3 legs of a stool. The first is sort of the co-working and flex business, which we call Space as a Service. The second is sort of this membership model like a health club called the All Access business. We have 45,000 members today. It's a $120 million run rate business on a yearly basis. And the third leg of the stool, which really is a product of the pandemic, is effectively this workplace management solution where we're able to optimize real estate solutions for companies that belong in our real estate and those that do not belong in our real estate. So I think the way to look at WeWork is we're a provider of end-to-end solution for both SMB and enterprise on a turnkey basis.
On the question of flexibility, and it's a word I've heard you use often in these kind of interviews, I understand through the pandemic how that was a beneficial sort of quality to have for the business, because indeed the whole world had to be somewhat flexible for that period of time. As we come out of that and go back to a sort of more traditional workplace environment, how does a company like WeWork adapt?
So, there are two aspects of it. Again, the leaders in the field of CBRE and JLL have produced reports talking about how flex will go from about 2.5% to about 20 to 30% by the end of the decade. On the contrary, in London, flex is about 6% of the market. And recently, the CEO of Canary Wharf Group made a comment that he thinks about 20% of his portfolio will be flex. So when you sort of look at what we do for a living, I feel for once I'm on the right side of the fence. When I was turning around a shopping center company, we were combated by e-commerce and how e-commerce disrupted bricks and mortar retail. And there's a lot of similarities. So flex is actually, made for this moment in time where the future is uncertain. And so if you're doing a traditional transaction, you have to know where you're going to be 12 to 18 months from today. By the time you sign a lease, build out your place, your supply side issues, all these unknowns, versus we provide a turnkey solution. And effectively, so flexibility is actually the name of the game as we come out of the pandemic and hopefully go into this endemic stage. And a lot of the companies, the SMBs, that either gave up their space during the pandemic are coming back because they now want space. So over half our business has been the small, medium businesses. Entrepreneurs were created in 2021, 5.3 million businesses in the United States, which again is really top of the funnel for us.
Demand obviously continues. Let me ask about something that is potentially in the very near future. We understand that Adam Neumann, the founder of the company, as I alluded to, left in 2019, is now in a position to come back onto the board, albeit as an observer, and as of this weekend just gone, he could make that request. Has he made that request?
So yes, he can. As you know, there was an agreement between SoftBank and Adam Neumann that after a year of their settlement, he could be an observer on the board as an observer seat. So far, we haven't had that request made by Adam, but you are correct that he does have that right.
Would you personally welcome him back to the board?
He's the founder of the company. I give him all the time a lot of credit for what he did. He created an amazing company that two beautiful things. It has an amazing product. It has an amazing community. People, our frontline workers, they are amazing, and we are synonymous today with SMB and tech. So he built, and by the way, over the last 2 years, I speak to him often. I firmly believe that you have to give respect to the founders of an organization.
Sandeep, great conversation. Sandeep Mathrani there, the CEO of WeWork. Wonderful to have you on. And Kaylee, with that, I'll turn it back to you.
All right, Bloomberg's Ed Hammond, thank you so much for that interview. And there will be more coming up later on today, 2 p.m. New York time, 7 p.m. in London. Bloomberg will have an exclusive interview with Jamie Dimon, the JP Morgan CEO, from that conference, so don't miss that. But coming up here first, oil and natural gas prices soaring after more sanctions were imposed to isolate Russia. We'll talk about the prospects of a global energy crisis with the CEO of Devon Energy. This is Bloomberg.
sponsors now.
Let's check in on the Bloomberg First Word News. I'm Ritika Gupta. Russia has come out with some sanctions of its own. It's banning airlines from 36 countries from using its airspace. That's in response to the ban by European states on flights operated by Russian air carriers. The list of those banned from flying over Russia include the EU countries and the UK. In Hong Kong, the government is being forced to move away from the key pillars of its strict COVID-0 policy. A surge in new cases has overwhelmed the healthcare system. Patients with mild cases are no longer sent to hospitals or isolation facilities because there's no space, and contact tracing has been put aside. And the world's top climate scientists are warning that there's a closing window to get ready for a hotter world. The 3,500-page report says there's a growing mismatch between rising temperatures and slow, fragmented efforts to adapt. It warns that countries must do more to save billions of people from floods, droughts, and other hazards. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Guy.
Ritika, thank you very much indeed. The commodity market continues to be roiled by what is happening in Ukraine and the sanctions that are being imposed on Russia. Aluminium set to hit a record, but many of the world's biggest producers of aluminium are in Russia. Take a look at what's happening on the London Stock Exchange today. You'll see share prices of Russian producers under significant pressure. Nickel rising. Wheat is close to its highest level in more than 13 years. Ritika was talking about the flight bans that we're seeing. You see a lot of precious metals being flown out of Russia into other markets. Joe Doe, Bloomberg's head of metals and agriculture reporting, joining us now to give us a take. Joe, just give us a sense of how much clarity there is in the market right now in terms of commodity supplies. What is available, what is not, what is going to be available in the future, and what may be restricted?
Yeah, I would say the clarity is not very good right now, and I think this is what traders have been trying to assess basically since Thursday. Aluminum, I think people are still trying to figure out what exactly can you expect. Russia's the second largest exporter of aluminum to the rest of the globe. They just announced that Rusal, which is the Russian aluminum company, just announced that they are stopping shipments of a key material to make aluminum that comes from Ukraine. So obviously we saw prices shoot up because of that. And I think there remain questions in the United States as to how this bears out. Canada is our largest supplier, but Russia does still supply a lot of billet. When we look at the grain side, I think we've had major questions because all the ports have been closed in the Black Sea. Between Russia and Ukraine, they supply about a quarter of the world's grain exports. People are trying to find other places to both take shipments and send their shipments. When you're talking to some of the traders over the past 4 or 5 days, they keep saying, hey, listen, what we're trying to do is figure out if we've got a ship on the seas, where do we send it? And I think everybody is just trying to figure this out, and that's why we have another day of commodities from metals to natural gas to grains ripping higher.
Well, on the subject of natural gas and as well as oil, Joe, is there actually going to be as disruption in those markets specifically as there could be in some of the ags or some of the metals?
Yeah, I mean, I think it is yet to be seen. I mean, one of the things we were talking about on Friday was that, the natural gas pipelines that run through Ukraine supply a significant amount of what goes into Europe. The question is how much continues to go through those pipelines. And I think a big question also is we now see a number of Western, European, and U.S. Groups cutting off the SWIFT transactions to certain banks within Russia. I think when you start hearing those things, traders start asking themselves, okay, wait a minute, we need to start looking ahead, right? Skate to where the puck is going, not where it's at.
Right.
Do we now just assume that we're not going to be able to do a lot of transactions with anyone related to Russia? I think these are the real concerns running through the minds of anybody in the market.
All right, Bloomberg's Joe Doe, thank you so much for a look at what is happening across commodities. Let's zero in, though, on what's happening in oil and the energy markets. Rick Muncrief, Devon Energy President and CEO, is joining us now. He is here with me in New York. Rick, thank you so much for joining us. As we're watching this crisis play out, we are seeing somewhat of a risk premium priced into oil. Right. $100 Brent, 95 on WTI. At what level would Devon start pumping more?
Well, Haley, it's very nice to be here with you this morning. I think for us, we're really going to be disciplined. We're going to continue to be focused, and the forward curve, if you look at the strip, it's saying the markets which are always very efficient, they don't think crude oil prices will stay at this level for long because you have such a steep backwardation. For us, we need to see the shape of that curve come back up.
Rick, good morning. It's Guy in London. Even if you wanted to pump more right now, how restricted are you in terms of labor, in terms of all of the other stuff that goes into producing a barrel of oil? How easy is it to come by? How production restricted are you right now?
Well, that's a great question, Guy. I can tell you that labor is tight, especially where we've gone on record as saying the Permian Basin is probably where you're going to see most of the sustained growth. That's not to say some of the other basins couldn't have some growth, but sustained growth is going to be in the Permian, and we continue to share with our investors to the market that the market is tight. Let's be patient. Let's be disciplined, and we are still recovering from a pandemic. We can't forget that, and so. Things are tight. We've seen tightness in things like steel, things like sand, and other things. So I think patience and discipline are the key words for us right now.
Well, obviously, Rick, tight on the supply side because production capacity is still constrained, not just in the shale patch, but from OPEC as well. On the demand side, given how high prices are, do you think there could become a point where we're going to start to see demand destruction in the oil market? I
really think so. And I think that at what point is it going to be, let's just say, that's a point of discussion. We won't know till we start seeing it. I personally don't think you would see much demand destruction until we saw a WTI of 120 or somewhere in that range. So I still think that you could see the commodity continue to move higher before you start seeing that demand destruction. But I think for many producers such as Devon, we need to see the shape of that curve come back up. And so I think the only thing that's going to happen is continued discipline and focus.
Rick, you've mentioned the curve twice now, and there are some that think that actually this could be a much more sustained crisis than is currently being priced into that curve. As you say, heavy backwardation right now. Do you think the curve's right?
I think the market is typically very, very efficient. And we get this question quite a bit, especially over the last, 72, 96 hours where we've had the developments in the Ukraine, the way it's all played out. At what point could you start seeing additional barrels be put into the market? And quite honestly, if you were to add a rig today, you would be 9 to 12 months before you really started seeing the impact. Most of the development that we're doing here in the U.S. today is on multi-well pads. So you're drilling 4 to 6 wells on a pad. So you have to drill 4 wells, you have to complete those at facilities, and so if you could drop the flag today, you could say roughly 12 months out, and that's where you start thinking about the impact of inflation with the additional activity, labor issues, things like that, coupled with that backwardated curve, and that's where most producers are saying, and I know Devon, we're not going to be the first ones to the starting line. We've seen some growth from the private companies, and bear in mind, we could see anywhere from 500,000 barrels a day to 1 million barrels a day at the high end here in the U.S. of supply added in 22 over 21. And so we will see the U.S. doing their part to get additional barrels in the market. But for publicly traded companies such as ourselves, we're going to try to keep production levels flat, be consistent, and make sure that we get really good barrels into the market on a very trustworthy basis. That's a term that I heard used the other day, and I think it hits a nail on the head.
All right, so staying disciplined on the production side, Rick, obviously you are returning a lot of capital to shareholders as well. Do you foresee putting capital to work elsewhere, making acquisitions, any M&A in Devon's immediate future?
Well, that's something we're always looking for bolt-on type acquisitions that make sense and are adjacent to the 5 basins we're in. We're really thoughtful. The fixed plus variable dividend has been a big hit. We've also announced a share repurchase program, and so for your listeners, we have a $1.6 billion approval, of which we've already in the fourth quarter of 2021. We repurchased $600 million worth of our shares, a very attractive $42 a share price, I might add. So we'll continue to be opportunistic. We're also paying some additional debt down. That's our plan over the next 24 months. We have a chance to to pay off another $1 billion of debt, only which about a fourth of that is actually maturing. So we're calling debt, and so doing everything we need to do just to build a very, very strong company, strong balance sheet, great assets, great people. The variable dividend, getting cash back to shareholders. So the next thing is the debate of the fixed plus variable, how much of that needs to be the fixed piece of that. And I think we'll continue to do that. We just announced a boost from 11 cents a share to 16 cents a share on the fixed part. But we'll continue to discuss that with our board.
Rick, just in 10 seconds, should the president do an SPR release again?
Well, he certainly can. We've done that before. It really didn't make a huge impact, I think, over the long haul. And my personal opinion is that should be, you should wait on that until it's a true crisis. And that's not to say that we don't all feel a little more of a pinch at the pump, which we do. Yep. I put that in a different category than a true national crisis, which is the fundamental reason SPR was put in place to begin with. And so he can, but I don't know that it's going to make an impact for the long haul. I think we just need to be patient. We also have to recognize that the OPEC plus nations are having a hard time even meeting their quotas. So I think two or three things going on there. I think number one is they're seeing the impacts of inflation, startup issues. Many of these nationalized oil countries, I'm convinced, have been impacted from paying the bill of COVID. Let's face it, they've had their economies really stretched as well. And now I do think that down the road, I think this is where the curves are actually missing it, and it'll take time for them to fully realize that. And that is when these volumes fail to show up. And we've been underinvesting in this sector for quite some time now, and especially internationally. And so we'll see how it all plays out. But my thoughts are it's going to really roll over and it's going to be really challenged.
Rick, great to catch up. Really appreciate you joining us in New York. Rick Muncrief, Devon Energy's president and CEO. This is Bloomberg. Bit of breaking news coming out of Moscow. Vladimir Putin, the Russian president, announcing within the last few minutes that he is banning Russian residents from transferring foreign exchange abroad to try and front-run the sanctions. This is going to come into effect on March the 1st, so fairly imminently. We've also got news out of the UK. The UK announcing measures that basically will prevent Russian banks from clearing transactions in sterling. European stocks are actually near session highs. Utilities are leading the way up. Banks leading the way down. The European banking sector down by 4.5%. Details to follow. The close is next. This is Bloomberg. Monday the 28th, European stocks off the lows. Nevertheless, banks under significant pressure. We'll talk more. The countdown to the close starts right now.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.